What will a war overseas do to our housing markets and Australia's economy? Now, at the time of recording, what's happening over the other side of the world is horrific, and the humanitarian and economic impact is going to be tremendous and possibly long-lasting. But what will that mean for us here in Australia? That's what I recently discussed with Dr. Andrew Wilson, Australia's leading housing economist, in our weekly Property Insider video chat that I record every Tuesday with Andrew. But today is the audio of that video podcast, and you don't really need to see our faces to hear the message about the predictions that the war overseas could cause property markets to crash here. So you're going to hear what our thoughts are, as well as the latest statistics in our property market and our economy, which is going to give you a good indication of what's ahead. So welcome to today's show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Only yesterday I was shocked to read the headline, "Property prices are set to tumble 15% as the Ukraine crisis bites." And it seems like the media and many commentators are looking for an excuse, any excuse, to explain why our property markets are going to crash. A couple of years ago was the fiscal cliffs we were going to fall off, and then it was massive unemployment, and more recently surging inflation and interest rates that would cause our property markets to implode. And this is despite history showing us otherwise. But now AMP have come out suggesting the fallout from the Russian invasion of Ukraine could slow residential property sales. It would increase inflationary pressures and would accelerate downward property prices of about 15%. And that's despite Australia's property markets generally performing well during major economic, military and terrorist crises over the last 40-50 years that I've been tracking the housing markets. And these forecasts don't seem to take into consideration the strength of Australia's economy at the moment, the fact that we've got a shortage of good houses, which is only going to be challenged by a flood of incoming migrants, and they're not taking into account the resilience of our housing markets and Australia's banking system. Now, what's happening on the other side of the world, it's horrific, and the humanitarian and economic impacts are going to be tremendous and probably long-lasting. But what will it mean for our property markets locally? That's what I'm going to ask Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market, in this week's Property Insider chat. Hi, Andrew.
Yes, good morning, Michael. It seems we're forever discussing outrageous house price forecasts. No, it's another week goes by and it's another outrageous forecast regarding house prices. And it does come from the usual suspects, of course. It doesn't seem to bother them too much when they're proven wrong. And I guess that's all about short-term memories in media land. But look, at the end of the day, it's a bit of fun, I suppose, to review these silly forecasts. But from the point of view of consumers, really, you wouldn't want to be making financial decisions based on the roller coaster ride of house price forecasts that we typically have. It's a bit of fun to look at these numbers as they change. And there is a short memory span in the media for the erroneous outcomes mainly that occur. But it's not the environment that you want to be using as a base for significant financial decisions. And I think that's the difference that we try to make, Michael, is that we're about rational insights that you can look to generate your insights into your financial plans. And isn't that what we all should be about, not just trying to chase cheap headlines?
Well, Andrew, in the same article in the Financial Review, they reminded us that property prices in Sydney's harbourside postcodes plunged 36% when the mini submarines launched their attack in the Sydney harbour in 1942 at the height of the World War II. Really?
Who's the journalist, Michael?
History shows that major international crises tend to cause short-term falls of confidence, but they promptly rebound once the political tensions ease or an economic growth resumed. Now, I don't know, in my mind, the biggest threat of the Ukrainian crisis is escalating into a regional war, a nuclear war, and hopefully that's not going to happen. But what's, I guess, more likely to happen is maybe rising oil prices, rising energy prices, increasing inflation a little bit. And sure, it may slow our economic growth a little bit, but Andrew, why would it cause our property markets to fall?
Well, we could speculate on what could happen to the nth degree as a result of what's happening currently, and let's hope we don't get those extreme outcomes, Michael. I think that's getting a little bit ahead of the game at the moment. But certainly the issues you mentioned, the economic outcomes are what would affect our economy, and that would be of higher fuel costs, which would work its way into inflation. And of course, that has downstream consequences. But we have to have incomes rising for the Reserve Bank to be thinking about as well, to the Reserve Bank to be thinking about higher interest rates. So it's a conundrum for us, but what would you be doing? Just selling your property? It's always an exciting opportunity for those that like to chase cheap headlines when something such as the European war occurs. And there's always hopefully, of course, that this will settle down, and that's the get out of jail card when it doesn't move into an extreme outcome. They can say, oh, well, that would have happened if that had have occurred. But to be quite honest, Michael, if we were heading towards a nuclear war, I think house prices would be our last of our concerns.
You're right. Now, we've spoken in the past that overall Australian house prices over a year, based on the Australian Bureau of Statistics, have never fallen more than around 5.5%. But what's the worst case that's happened in an individual market, Andrew?
Well, Michael, we analysed the capital city markets, not just the national markets, in terms of calendar year falls. So that's the fall from December quarter to December quarter using the ABS data series, which goes back to 1987. And we can see again that the worst results are Melbourne and Sydney at around about 7% annual falls. So those that are predicting double figure price falls over a year are certainly not looking at the historical evidence because that would clearly be unprecedented in terms of the modern era in house price growth. I'm not sure what sort of a methodological approach that these analysts, these economists are using. What sort of time series factors are they gauging? Perhaps we should ask them what their methodology is, Michael. Rather, unfortunately, it might be just sort of throwing the dart at the dartboard or picking a number out of a hat, but it doesn't seem to be rational in terms of the historical evidence, which is where you should really begin, I think, in any methodological approach for time series forecasting. And as I just said, that the worst declines over a year in house prices on a capital city basis were Melbourne and Sydney, around about 7 to 8% over a year, and that's well short of the 10 to 20% that's currently predicting. And Michael, just adding to that, even if we look at the non-calendar year annual falls, in other words, not December to December, but if we look at annual falls in other quarters, the highest result there is around about 10% on any quarter-to-quarter fall over 12. And that was, of course, during periods of not just cyclical issues, but also seasonal issues as well. But even then, it's well short of what the forecasts are now generally for Australian house prices. But even if the get-out-of-jail card for those predicting the extreme outcomes for house prices is saying that peak-to-trough falls in terms of the cycle are concerned, but the sharpest peak to trough fall that we've had in house prices, according to the ABS, was around 13.7%, Michael, in house price falls in Sydney, and that was between June 2017 and June 2019. So that's a 2-year period where house prices fell by 13.7%.
There are other factors involved in that as well, and basically a credit squeeze, the sort that we hadn't seen for a long time.
We had the fear factor also, which created momentum during that period, and that was when APRA were acting to tighten lending.
Definitely. And at the moment, though, our economy is doing really well. We've had the strongest lift in the economy since 1976. So the recession some of these commentators were predicting because of COVID and because of the lockdowns, that didn't come to fruition either, did it?
No, it was a busy week last week for data, Michael. Of course, on the Tuesday, we had the Reserve Bank again confirming that it's certainly still got a wait and see approach to higher interest rates, and it's prepared to be patient. Just reiterating what it's been saying for months. We also had the home loan data out, which was another record month over January for home lending, but the rate of home lending is starting to decline. even though it is still at a record level. But the big data there was that investors are continuing to surge, really a lot of activity from investors over January. First home buyers are falling, no surprise, with higher house prices, and they are now below their long-term market share. But really, first home buyer activity is held up pretty well. And I think that's a little bit of the bank of mum and dad acting to support first home buyers in that, sense that property remains and is increasing as a safe haven for investment. And of course, as you mentioned, we had GDP for the December quarter, strong result. No surprise, it was a bounce back from New South Wales and Victoria and Canberra following lockdowns in the middle of last year. But from the point of view of interest rates, Michael, there were some commentators who were saying that the Reserve Bank may be looking at the wage implications that come out of the GDP. There was nothing there to get excited about. In fact, if anything, it was on the downside. We certainly had a pickup in compensation to employees, which was no surprise given that compensation to employees had fallen over the September quarter. It picked up over the December quarter as a bounce back, but there was nothing really exciting about the 2.2% increase over the quarter. But on the other hand, we actually had a fall in disposable income, which is concerning, over the December quarter. And we actually had a sharp fall in the savings ratio as well. Still pretty high, the savings ratio, Michael, but it does show that consumers are starting to work their way into their savings because perhaps of higher prices and that lower disposable income. These are certainly not the circumstances that the Reserve Bank would be considering to raise rates, because it does not support in any way the rising of wages. And it certainly follows the wage index data that we had released a couple of weeks ago in regard to that December quarter. So good news, not really a surprise that we bounced back. Australia's economy is doing very well, but we are certainly not seeing the wages increase that would be needed to substantiate an increase in interest rates anytime soon. And that's what the Reserve Bank has been telling us for quite some time, Michael.
Other data coming out last week also was the building approvals,
Yes,
which were released by the Australian Bureau of Statistics, and they showed dwelling approvals for new homes fell back to pre-pandemic levels. Of course, Andrew, one of the questions one really has to ask is how much was housing construction brought forward due to home building and other state-based construction grants? And this is just the spin-off from that.
Yeah, absolutely, Michael. And there was a sharp fall, and we are moving back to more of that pre-COVID normalisation. And Australia's been underbuilding now since 2015. Our supply lines have fallen dramatically, and this is why we're seeing rents go through the roof as one instance, not just the credit squeeze that took investors out of the market, but we're just not building enough houses. And this is only going to exacerbate housing shortages when our mass migration starts up again, which is imminent. And I know that the industry said, oh, well, it was just a response to the issues with COVID during January. But look, that really doesn't hold water, that argument overall, because there were markets such as Perth where we saw also home approvals falling. And of course, they didn't have the same issues in regard to COVID that particularly Melbourne and Sydney did through January. So it is, you're right, absolutely, just the moving back through that stimulus period for housing. A lot of demand has been brought forward. And we've also seen that in the latest data on house building costs, which are continuing to rise quite strongly. And of course, it'll take some time for building costs to flatten out. And mainly that's reflecting increases in the cost of materials and supplies rather than labour. The rate of increase has declined for building costs over the January quarter, but it's still high. And the annual increase for building costs for houses, Michael, is a record. It's up nearly 18% over the year to January. So my point is that this will work its way into inflation as well.
Unfortunately, some builders are going to suffer from this. Those who've entered into fixed price contracts, we've seen it on a much larger scale with ProBuild, but hopefully there won't be too many small builders who are going to go under not being able to complete their contracts based on rising costs. I know some are trying to renegotiate their already set construction contracts.
Yeah, that's right, Michael. And it's the old story. When we have too much demand and not enough supply, in the shorter term, it can cause these imbalances. And in the type of industries that, well, the building industry is, the house building industry is, that can cause stress amongst builders that are, because of high levels of competition and low market power for individual builders, can unfortunately lead to some very serious financial issues.
Yes, it really seems like the weather events, the wars and all the other concerns haven't stopped our property markets, and we sort of knew that was going to happen anyway. So I look forward to catching up with you again next week as we unpack what's happening in our property market.
Yes, thanks a lot, Michael.
Well, I hope my chat with Andrew Wilson has given you a little more clarity and less concern about our property markets moving forward. But 2022 promises to be a fascinating year, a challenging year in real estate. It's not going to be like last year where properties all around Australia increased in value. I mean, that was a really unusual year. We experienced a once-in-a-generation property boom where property values grew, well, at least 20% and often more than that in most locations around Australia. But this year is shaping to be a more normal market where some locations are still going to see strong price growth. Some will experience moderate price growth. Some locations will languish, and a few locations are going to see property values falling. I can see this year as a year where the FOMO is going to move out of the market. It'll actually probably move into the rental market as rents move up. But property buyers who last year took shortcuts just to get into the market now have got more choice and there's less pent-up demand. So A-grade properties are still going to do well. B-grade properties may just hold their value, but C and D-grade properties are going to miss out. So you can't just buy any property. In fact, the quality of your property will make a big difference, be the most important factor in the long-term returns and success of your investment. And that's why it would be great to have my team at Metropole on your side. Well, I was going to say to level the playing field, but actually to put the odds in your favour. In my mind, if you're going to spend so much money investing in property, you need to start off by investing in a plan to make sure that you can achieve your goals. So we always start by putting a strategic property plan together for our clients, and then you may choose to use our wealth advisory, property management, buyer's agency, renovations, development, or even business management services. But first off, get yourself organised, bring your future into the present and make a plan to become the person you plan to become. And just like last year and the year before, and now this year with the war, plan for your plan not to go to plan. But that's why we regularly help you by reviewing our clients and making sure everything moves in the right direction. So go to metropole.com.au, find out about our range of services. And remember, since we don't have any properties for sale, the advice we're going to give you is independent and unbiased. I look forward to being part of your wealth creation journey. metropole.com.au.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
Is fear holding you back in your career? Maybe it's in your relationships, could be in your investment journey, or maybe fear is stopping you achieving your dreams. Now, if this is the case, you're in good company. So I'd like to have a little chat with you in this mindset session about the common fears that hold people back. But before I start, I guess I should say you've probably had lots of people give you advice on getting past your fears, suggest that if you can break the shackles of fear, you're going to be unstoppable. Now, that's all well and good. It is important to master your fears in order to feel free, and you've got to master your fears to get things done. But I also want to tell you that a world without fear would be simultaneously more dangerous, less rewarding, I don't know, just plain flat. So given that we've spent so much time wishing that our fears would go away, so that we can get on with things, let's first of all have a quick look at why you may actually want to cultivate fear as a friend, not as an enemy. You see, fear is a great guide to opportunity. Think about it. Fear often shows you what's important, what matters to you. And if you didn't have fear to guide you, maybe you wouldn't know what's important. So maybe fear isn't that bad after all. And of course, fear motivates us into action. The way I see it, way back years ago, our ancestors who didn't run away in fear when they saw a saber-toothed tiger running at them simply just didn't survive to reproduce. So fear does call action into being, doesn't it? Now, most of us don't face serious physical threats from hungry tigers every day, but we do face them from, crazy bosses, angry clients, the fear of public speaking. Now, that's very common, isn't it? Now, in those cases, our fear is still motivating us to do something, to enhance our chances of survival. The trick is to be able to transcend our primitive lizard brain and do something useful. Running away or throwing a spear may work on tigers. It doesn't actually work too well on your bus, does it? So what I'm trying to say is fear does have some uses because it actually lets you know that you're alive. That's why we like roller coasters. Anyway, I do, because they scare us, mostly in a safe way. Same with suspense movies and thrillers. So, yes, you do have to have some fear in life. But let's go through 9 of the common fears that could be holding you back from achieving what you deserve in life. And the first one I'd like to discuss is the fear of rejection, because many people avoid entering relationships or try to meet new people due to the fear of rejection. Whether you've got a fear of your boss declining a request for you to get a raise, or a fear that that attractive person won't go out on a date with you, don't let the fear of rejection hold you back. Do it anyway. Of course, a big fear is the fear of failure. One of the top fears in the world is the fear of failure. Many people just won't try anything unless they're confident they can win. Failure is a normal part of our life. You've heard me say it over and over again in these sessions that I'm a real success at failing. I've just gotten up one more time, because failure will similarly help you find your eventual success. People are also scared of uncertainty. They've got the fear of uncertainty, and it prevents them from trying something different. They sometimes think, well, what if I wouldn't like it? This fear can prevent you from trying new things or doing things in a different way than you've always done them. As you see, I'm working through the common fears to see which of those may be affecting you and holding you back. If you talk about relationships, it's sometimes the fear of loneliness. Sometimes people stay in bad relationships or resist living alone because of their fear of loneliness. Learning how to tolerate feeling lonely and finding ways to keep yourself company could help you manage to get over loneliness. Of course, the big one's the fear of change. We don't like change, but in this rapidly changing world, it's something you've got to get used to. Many people resist change. Fear of change causes some people to become stagnant, and they miss out on a lot of the really great opportunities in life. Now, a big one's the fear of being judged. People worry that other people will think negatively of them, so they shy away from social opportunities or chances to advance their career. Now, people who adopt this fear, the fear of being judged, they often exaggerate how other people are going to perceive them. They think people are going to think negatively of them, talk behind their back, and they often underestimate their ability to tolerate not being well received by others. Let me put it this way. What other people think of you is none of your business. Clearly, another fear is the fear of something bad happening. Bad things happen to us all the time, though. It's inevitable. However, when people constantly fear something bad's going to happen, it often restricts their activities. They may avoid doing lots of things that they should be doing, or going to certain places, or taking on investments. Don't be scared of bad things happening. Do your homework, do your research, get on with it. Of course, another fear is the fear of getting hurt. None of us like getting hurt. I mean, if you didn't mind getting hurt, you wouldn't look both sides before you cross the road. However, a big fear of being emotionally hurt often stops people getting into the right sort of relationships, or avoiding friendships, or keeping family at arm's length. So think about what you're missing out on. Think about how realistic your fears are. But the big fear I come across with business people, entrepreneurs and investors, still said with the very, very successful investors we spend time with every year at Wealth Retreat, is the fear of inadequacy. It's a fear that all people seem to share, that feeling that we're just not good enough. And that allows us to pass up opportunities or decline the opportunity to go ahead and do things because you think you're inadequate or you don't deserve it. Often people overcompensate for their fears by trying to be a perfectionist. Perfectionism is really a fear of not getting it right, and then they get plagued by the thoughts that they just won't measure up to other people. So I guess what I'm trying to get at is fear is normal. Use fear to motivate you, to move you forward, to remain alive. Use fear as a guide towards what's important for you. And as I said, to motivate you to take action, to improve your odds, to give you a chance to get ahead. Don't let fear hold you back. Thanks for spending the last half hour or so with us. if you got some benefit from my chat with Dr. Wilson, if it's giving you a bit more certainty about the markets ahead, and you know somebody else should also get some benefit, please let them know about the Michael Yardney podcast. You do me a real favour in helping more Australians become financially independent. That's my goal. And I've also got a little gift for you as a way of me saying thank you to you for subscribing to my podcast. Go to podcastbonus.com.au and I've got a range of ebooks and reports for you. Podcastbonus.com.au. I'll leave a link in the show notes. Now, I'll be back again real soon, but you can catch me in between on social media. Just look for Michael Yardney, or why not join me in my private Facebook group. Go to Facebook and look for the Property Update Facebook group, where each day I leave some tips, some tricks, some information about property, investment, money and success. As I said, I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?